Hi, everybody. Welcome back to the Comstock channel. I'm Marlin Bowling with you. Thanks for joining us today. I am joined by Joe Camp of Comstock Investments. We're going to analyze what happened in the ag commodity markets on Wednesday, the day before we get the much anticipated USDA reports. We'll get the quarterly stocks report and also the planting intentions report coming out on Thursday at noon Eastern time. Be sure to like this video and subscribe to this video. Make sure you share it with others as well. All right, Joe, as we analyze Wednesday's market action in the commodities ahead of the report day tomorrow, seemed like kind of a dud to me. I don't know if you can read much into that market action. How do you think the trade is getting positioned ahead of that report?
Certainly technically driven. We'd had quite a rebound from those February lows, but then running up into the top end of the ranges for corn and soybeans in particular, a bit of pushback there, and ultimately some profit taking on some of these fresh longs, some position squaring in general ahead of these reports. Let's get out of the way and wait and see what those numbers bring kind of attitudes, plus some fundamental negativity, really a lack of positive input for sure. But on the more bearish end would be weather in general. And that follows from these recent rounds of moisture coming across the U.S., mostly northwestern type Corn Belt area, some of that snow, some of it rain, but we'll take it. A shot of moisture ahead of the new planting season, much needed in so many areas. You look at the precipitation map of the last 7 days, you can see those precipitation anomalies and then purple blue areas where they're getting 300, 400% of normal over that period. And places like Iowa where they were red on the drought monitor and still are. But again, we'll take that moisture and we'll be happy for a 2-week outlook that is generally off and on for some spring-like rains. Who didn't get the rain would still be some of those southwest areas of the Texas Panhandle and on into a lot of Kansas. So that's going to be a concern still as we head into the new growing season. But when you pair some moisture here in the U.S. with what has also been a flip of the weather outlook for South America, and that's more of a negative. For South America, it had been dry throughout a lot of Brazil. It had been too wet in a lot of Argentina. We can see that on their precipitation anomaly map over the last month. But the flip of that is in the outlook, and something actually that it's already started to occur this last weekend, where the areas like Mato Grosso, the big Safrina corn growing state of Brazil, are getting more moisture. And then down into Argentina, they're getting a break in what had been excessive rainfall that was threatening the start of the harvest and ultimately soybean quality. So weather a bit of a negative, but we'll see what happens tomorrow to certainly have the potential of a direction change.
So on the Safrina corn crop in Brazil, I realize it's a fairly wide belt where they plant the corn there. But in general, on average, how far along would that corn be about now? Do you think we're talking like knee high right now, or would it be further along yet?
I think you are in a lot of areas where they're pretty well wrapped up for the past month or so, which would include Mato Grosso. They are going to have knee-high type corn or a little bit further along down in southern Brazil. You mentioned the wide range. I mean, we're talking about the southern most state, Rio Grande do Sul, being recently only less than 10% planted on Safrina corn. Now they're going to have ultimately less acreage than they would up in Mato Grosso. So the bulk of that really important Safrina crop is in and dependent on where weather goes from here. Again, some stressful conditions leading up to this point, some better weather as of late, but not out of the woods by any means, especially as this El Nino transitions away and potentially eventually is followed up by a La Nina. So they could certainly see an end of the rainy season developing some worry about that second crop of corn, which we'll watch, of course, so closely because of how it competes most heavily with our corn exports.
So from what I know agronomically about the corn plant, that tells me that they'll basically be setting the potential ear size in the next 3 weeks already.
Right. Again, a wide range, but in that important state of Mato Grosso and up in that center west region or the northern stretches of Brazil, it's a crucial stage for that corn crop. And so these forecasts, while they provide some rain, aren't guaranteed as we go out, say 3 or 4 weeks. And the same could be said, for U.S. and the way our weather outlook stacks up. A little wetter for now to help out, but we'll be at risk again of these calls for a warmer, drier start to the summer.
Okay, let's go down that rabbit hole and let's take a look at tomorrow's report. I think you have some early estimates of what the trade is anticipating for the numbers. First of all, I think let's take a look at the planted acreage estimates that will come out from USDA. That'll be for corn and soybeans and, also for the wheat overall, I believe. But there's going to be a lot of attention on cotton acres too, right?
Absolutely. It's a moving target and always is at this point of the year. We should start to see an influence of how the southern acreage decisions stack up. The first crop progress report, mind you, will be out on April 1st. A year ago, it was 2% planted because we do get some of that crop in the ground in a state like Texas. But for the Midwest acreage decisions to come here, there are going to be some choices made about crop acreage given the relative strength of, say, corn to soybeans, or in particular, the conversation lately about corn against cotton in the South, where cotton had been stronger until just recently in a way that really caught growers' attentions, and also sorghum. Sorghum, for some time now, running very strongly. We're exporting the vast majority of that crop to China. And so there's strong basis, generally strong demand and higher prices that are attractive to growers down there that could maybe supplant some corn acreage overall to take away from what we've been talking about here for the Midwest in general, which is that corn acreage is going to stay elevated because we're prepared to plant corn. That following a generally open fall, a pretty good stretch here early in the spring, expectations for it to warm up again here pretty quick, lower fertilizer costs in general from a year ago. A lot of farmers still wanting to plant corn here. And that's why, while the corn acreage estimates are lower on a year ago, they're higher than they were, say, a couple of months ago. And they're higher than the February outlook for them numbers were. And that's an important distinction. Last year, they came in really similar to that February outlook for them set of estimates. Even though these are supposed to be survey-based estimates, the USDA still has discretion on where they want these to land. And last year, it was exactly even with February on the soybean acreage estimate and up 1 million acres from February for corn here on this March report. Now, that's a similar expectation coming into tomorrow's estimates, with the consensus trade guess looking for corn acres at around 91.8 to 92 million. 92 million, that'd be 1 million acres even above the February outlook number. And for soybean estimates, the average trade guess coming in at 86.5 million acres, which would be 1 million acres below the February outlook number. So that's why I'm saying we're down on corn from a year ago. We're up on soybeans, but we're opposite of that in terms of these expectations shifting over the last several weeks.
Now, there would be potential for maybe a surprise in the quarterly stocks report too, right?
Always is. I mean, when you talk about a quarterly report, it's some time where you've had to potentially have discrepancies in expectations about demand. The so-called disappearance here with how you use these crops that are left over from last year. For corn, that could potentially mean on the bullish case that we've exported more of it than had been baked in here by most of these trade guesses calling for corn stocks from a year ago being up about 1 billion bushels. For soybeans, the anticipated pre-report estimate average-wise is for the quarterly grain stocks to be up about 150 to 200 million bushels from a year ago. Maybe the bullish case there would be that we've processed way more than we had previously expected we would. That could fit with this last NOPR crush report that just by and far away really crushed expectations, no pun intended there. You have a lot of moving parts on this grain stocks report. It's kind of pushed to the back burner because of how we're shifting our focus towards the new crop outlook and how much we care about these acreage estimates, but that is certainly a source of potential surprise.
Well, okay. And then we have the cattle market finally coming back a little bit on Wednesday. It's been a tough go here earlier this week. Seems like a lot of nervousness about the avian flu cases that were found or identified, I guess you could say, in a few select dairy herds in the Texas Panhandle. I believe there was one case in Kansas. But there's been speculation about something, some mysterious disease going on for a little while now. Do you think the trade has finally gotten past that? Or do you think that this is more of a, kind of what they would call a dead cat bounce after a hard sell off for a while?
I believe we'll continue to monitor this really closely. And I'm not going to say that we've gotten past it just yet, unfortunately. But I think today's action is a sign of cooler heads prevailing in a way. It's a sign of the liquidation event being behind us. And that's what yesterday was in reaction to that news, because we know the facts of it being, isolated to older dairy cows, to being something that doesn't affect the milk supply, won't be a problem for U.S. Beef. It's not going to be something that was so devastating, yet it seems, to the poultry industry, whereas these cows are reported to, have improvement or be better from symptoms in 10 days or so. But given that, we still have to recognize that it's a storyline, that it's a headline for the market to chew on. And when you talk about the speculators in particular, that's what we saw, in my opinion, yesterday was a knee-jerk sell-off that involved these bullish speculators stepping out of the market. It's opposite of what we saw for milk, right? Because milk's been up on the week in terms of prices. It's not selling off so hard because opposite of where the cattle positioning is, you don't have that real bullish bet held by the managed money crowd like we do on cattle futures. And that's one graphic I prepared here recently to show folks the cattle price for nearby live futures relative to managed money positioning, their net holdings in cattle futures and options. And what we see is that they've built up, again, quite a considerable bullish net long position in live cattle. And so you get some uncertainty like that, the nervousness. It would, as we saw, not be a surprise that it leads to some position closing, some profit taking, and just some step out, wait and see type of attitudes. Whereas today, we're back to thinking more about the fundamentals, that last 3-day sell-off or so had dropped cattle futures on a live basis, say $4 or $5 below the cash market. For feeders, some $5 below the real-time index here. So we do have a calmer type market today that is back to representing what we know to still be a pretty tight cattle supply and bullish demand fundamentals as well.
All things considered, the lean hog trade has held together relatively well all week long.
Absolutely. And you see that with expectations for the coming quarterly hogs and pigs report. That'll also come out tomorrow, different from the grain report, whereas we're going to have some time to digest this before the week closes, before the month ends, before we're off for the 3-day weekend. Well, the hogs and pigs report will come out after the bell, and we'll have to wait until Monday morning to price this into the market. But to those expectations, we're looking for the breeding herd to be down. And it's still a case where we know there's going to be contraction, tighter hog supplies into the summer months, and ultimately a response to what had been lower prices. Well, now we're moving them back up. We're seeing that, like the latest cold storage report, we're not abundantly supplied as we normally would be coming into the summer months. We're excited about warm weather to come. I know I've gotten the grill out already. We're going to have an early Easter. Consumers not pushing back against a pork cutout that's 15% above a year ago. We're seeing anecdotes of really good restaurant demand with spring break here. So all of those things have been bullish. And like cattle, you've got a speculator that's been buying up that market for the last 2 months or so, and reflected in a price that's now back to these recent highs pretty quickly.
All right, Joe. Well, tomorrow should be interesting. Thanks for helping to set the stage for tomorrow's action. And we'll talk with you again here before too long. But again, a reminder, there will be no trade on Friday, right? Good Friday. The markets are closed.
right, off for Good Friday. We will start up again on Sunday night for these grains, Easter Sunday.
You beat me to it. I was going to ask you about that. Okay. So Sunday evening, we will have Globex trade. All right. Well, thank you, Joe. Appreciate that. Good luck riding through the report tomorrow. That's Joe Camp of Comstock Investments. That'll do it for this episode. Thanks for joining us. For our producer, Breanne Hendrickson, I'm Marlin Bowling. Catch you next time on the Comstock Report. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well.